Hey everyone, my name's Mackenzie and I'm going to be showing the exercise 3.5. First, they start off with giving us a tabular analysis of transactions made during August 2017 by Ivanhoe Company during its first month of operations is shown below. Each increase and decrease in stockholders' equity is explained. So during this exercise, we're going to be completing the income statement, the retained earnings statement, and the balance sheet. So first, as we always do, we are going to start by completing the income statement, which is always revenue minus expenses. And so when we refer back to the transactions made, we go under stockholder equity, retained earnings, and then revenue, which is $10,600. And this, as we look to the side, is a service revenue. So on the income statement, we write, and I apologize for my handwriting, service revenue, and $10,600, like it said, where the transactions were made. So that's the only revenue that was there, so now it's always revenue minus expenses. So when we refer back to this sheet, under stockholders' equity, retained earnings, and expenses, we have the rent expense, the salaries and wages expense, and the utilities expense. So we'll start off with the salaries and wages expense, which was $3,300. And then next we have the rent expense, which is $740. And then we have the utilities expense. And sorry if I spell anything wrong, not the best speller in the world, which was $380. And we got all these under the expense column, under the retained earnings, under the stockholders' equity. And so once we add up all the expenses, we get total expenses, which equals $4,420. Then as we know, to calculate our net income / loss, it is always revenue minus expenses, which in this case, because revenue is higher than expenses, we do have a net income of $6,180. So that is the entire income statement for the Ivanhoe Company. And next we will move on to the retained earnings statement. So here's the header, and it is for the month ended August 31st, 2017. And when you refer back to the list of transactions they gave us, up on the top it reminds us that this was the first month of operations. And when you look, there's not a beginning return earnings number. And so what we're going to write as returned earnings for August 1st will be 0. And then we get our net income from our income statement that we just completed. So the $6,180 will go down here. And then you add your retained earnings, your beginning retained earnings, plus your net income. And now we need to subtract the dividends. So when we go back to this sheet, under stockholders' equity, retained earnings, and then dividends actually equals $2,200. And then when we subtract the $6,180 from $2,200, we get $3,980. And that becomes our retained earnings for the August 31st. That is our end retained earnings. And then we just completed the returned earnings statement. And then lastly, for the Ivanhoe Company, we have the balance sheet. And for our balance sheet, as we know, is for a certain point in time. So instead of for the month ended August 31st, like the income statement and the retained earnings statement, and it's just the August 31st, 2017. So for a balance sheet, we list our assets, and then we list our liabilities and stockholders' equity. So if we start off with our assets, it wants us to actually prepare a classified balance sheet. And so therefore, we start with our current assets. And our first current asset, and when we start here, is cash. And so what we need to do is we need to start by adding the 23,100, subtract the 1,590, subtract the 850, add the 5,100, subtract the 1,700, subtract the 2,200, subtract the 740, add the 370, and then subtract the 3,300. And that will give you your cash for the end of the month because there is 10 transactions. And so when we go over here under current assets, you will write cash. And once you do all that, it is $18,180. And then when we go back here under assets, we also know that accounts receivable is a current asset. So we need to take the 5,500 and subtract the 370, which we get 5,130. Oh, that's a zero. For accounts receivable. And then lastly, we have supplies under assets. And that is the last thing that's a current asset. So we will write supplies of 860. And now we need to add up our total current assets of 24,170. And then equipment, which is under assets, but as we know is not a current asset, which is something that can be traded into cash usually within a year. So equipment does not fall under that category, is 5,090. And then we need to add our total assets, which is 29,260. So we just completed the assets part of the balance sheet, and now we're going to move on to the liabilities and stockholders' equity. So first, because it's a classified balance sheet, we're going to start with the current liabilities. And the only current liabilities that are given to us is the accounts payable. And we need to take the 3,500 and subtract the 1,700. So accounts payable, which equals 2,180. And then that's it for liabilities. They only had accounts payable. And then when we move on to stockholders' equity, we know that stockholders' equity consists of common stock and retained earnings. So we start off by finding our common stock back at the list of transactions. It is right here under stockholders' equity. We have common stock and retained earnings. Under common stock, we have a total of 23,100. And then retained earnings, remember we just completed the retained earnings statement. And so the end retained earnings that we found comes from here, because what you have to do is you have to add your net income and then subtract your dividends to find your end retained earnings, and we found that as 3,980. And then you have to add in total your stockholders' equity. So when you add these two numbers, you get 27,080. And then we have to total liabilities and stockholders' equity, which when you do that comes out to, when you add the liabilities and equity, it's out to $29,260. And as you know, for a balance sheet, your assets and your total liabilities and stockholders' equity must equal for it to balance correctly, because as the accounting equation is, assets equals liabilities plus stockholders' equity. And they do at $29,260. So what we just did for this exercise was complete the income statement, the retained earnings statement, and the balance sheet. And I hope this helped you think it through and complete the problem. Thanks for listening.